Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now, video games are a hotly debated area, especially if, like me, you grew up being an avid gamer. Now, parents and policymakers have sometimes focused on the negative effects, including the risk of addiction, aggressive behavior, as well as physical and mental health challenges it can create. Proponents, however, have argued that played in moderation, they can be mood uplifting, help strengthen social, creative, and problem-solving skills, and stimulate learning. Now, your own views on this topic notwithstanding, video games continue to be a big focus in Chinese equity markets. Yesterday, China's gaming regulator granted approval to a range of technology companies to publish 60 new games, the first approval since the end of April. Now, while these directly impacted a handful of firms, Hong Kong equities gained broadly, led by the technology sector, as markets took the approvals as yet another signal that policymakers were easing up on the earlier regulatory tightening pressure as part of a broader shift towards more growth-supportive policies. Recall that this comes on top of recent announcements that have favored greater infrastructure spending, policies to promote consumption of appliances, and measures to boost lending more broadly. Now, all of this, of course, is consistent with our own view to prefer Asian equities, including Chinese equity markets, both because of how the Chinese policy direction is increasingly turning more positive against a backdrop of very supportive valuations, but also because they offer one source of diversification away from the US-centric outlook alone for other markets. Now, it's interesting that after yesterday's bounce, the MSCI China Index is now just outperforming US and global equities year to date, a trend, of course, we expect to continue and extend further. Now, staying with market moves for a moment, we also couldn't help giving another look at the S&P 500 technicals, given we'd started the week noting they were running within a fairly narrow range as they awaited a fresh catalyst. However, the index, when we take a look at the chart this morning, it looks like it's pretty much around where it started the week, staying within a fairly narrow range of about 4100 to 4180. Range-bound behavior that we expect was likely to continue until a fundamental catalyst causes a break in either direction. The key focus on this front, of course, is tomorrow's US inflation data, which is likely to set the tone for the following week, depending on whether it offers any signs that inflation is starting to peak. Any downside in the inflation number relative to consensus would be, in our view, a positive catalyst for markets. Finally, today is a big day for the European Central Bank, which holds a scheduled policy meeting today. We and the markets do not expect any policy changes today, but listeners will recall that ECB policymakers have guided markets that 25 basis point rate hikes are a likely baseline for the following two quarterly meetings. Now, markets are being a bit more aggressive and already pricing in about 75 basis points of rate hikes till September. And while it's likely that policymakers will repeat prior messages about keeping optionality open, dependent on incoming data, we would watch for any clues on whether a more rapid or more sizable pace of rate hikes are under consideration, given this is what markets are likely to be most sensitive to. Recall that a more hawkish ECB would likely be positive for the euro, the currency itself, given that would start to tilt the relative interest rate balance slowly but surely in favor of the European currency, assuming, of course, that US Fed expectations don't rise further. So overall, three things to focus on. One, of course, the immediate improving momentum in Chinese equities as an immediate opportunity. But of course, we keep an eye on the ECB signals, if that signals any potential opportunities longer term in the euro. And of course, we keep a close watch on those technical ranges on the S&P 500 technicals, especially if fundamentals offer a reason to expect a positive breakout going into next week. Now, we'll pause here, but of course, we'll be back tomorrow with the Through the Noise podcast, where we'll put all of this week's events in a slightly longer term perspective. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening and wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.